So over the last couple of years, really going back to 2022, when the market stopped following the Federal Reserve and rate hikes at the front end of the curve, what the market has been saying all along, with rates that are basically sideways to lower for almost, we're talking about 2.5 years. What the market is saying is that we don't see inflation spiking up and staying that way. Sure, there'll be back and forth along the way, as there isn't anything. Nothing ever goes in a straight line. But more importantly, as that disinflationary process was developed and was expected to continue in the marketplace, it was not being replaced by higher growth expectations. That's the real key part. We should have seen rates rising apart from the Federal Reserve. Instead, rates were fighting the Fed the entire way because the market was saying, we see the disinflation, but we don't see the growth that should be going with it. And that's with everything that was supposed to have changed over the last couple months. The market is saying, I don't really see any change. I don't see any change from the economic perspective, or data dependency from the Fed and how they're going to interpret all this information too. We don't see that changing either. So even if the CPI was hot this week, it wasn't inflationary. It was just a bunch of one-off factors that, stuff that we talk about all the time, like auto insurance premiums. We talked about that last year, right? Auto insurance premiums spiked up in January of 2024. It didn't lead to inflation.